Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at Everything You Need to Know in 90 seconds at 9 o'clock with news. More rises to our OCR may be off the table for now, but that doesn't mean our interest rates will stop going up. Most influential over the weekend has been the US headline non-farm payrolls, which expanded 209,000 when analysts expected a 225,000 expansion. This headline June expansion is the lowest in almost 3 years. Although the headline numbers called, economic activity hasn't slowed as much as the Fed officials expected, likely keeping their central bank on track to raise interest rates later this month to combat its persistent and above target inflation. The labour market has their backs for an increase, it seems. And Canada also released its June labour force data, and that came in better than expected, up 59,900 in June from May, when a 20,000 rise was anticipated. For all its economic recovery issues, China's foreign exchange reserves rose in June when no change was expected. Yes, the rise was small in US dollar terms, but it was a rise. They now have more than $3.193 trillion in those reserves, with less than $0.9 trillion held in US government debt. Taiwanese exports fell sharply in June from May, down more than 10% and an uncomfortable 23% lower than June a year ago. Ameliorating the pain was that imports fell even more there. And Japanese household spending remained low in May and is falling, with households there prioritising savings. If this trend embeds, it will be hard for Japan to maintain its recent economic expansion, and it will be up to their government to convert those savings into some sort of spending. The latest update to the FAO World Food Price Index shows prices continuing to retreat, with the pressures well and truly behind us. The US Treasury 10-year yield will start today at 4.07%, unchanged from Saturday, but up 22 basis points in a week, and that is a big move, and to its highest level since a brief March spike, and before that, November. For all the turmoil, we should note that the Fear and Greed Index is now strongly on the greed side of things. Investors are shrugging off their fears despite the bond market signals, but an upcoming earnings season in New York might deliver wavering results, and that could quickly upend that. The price of gold will start today at $1,924 an ounce and down $2 from Saturday. This price isn't signalling fear either. And oil prices are holding at just over $73.50 a barrel in the US, while the international Brent price is now just over $78.50 a barrel. And the Kiwi dollar starts today at just on 62.1 US cents and unchanged from Saturday. Against the Aussie, we're still firm at just under 92.9 Australian cents. Against the euro, we're holding at 56.6 euro cents. That means our trade weight index is now just over 70.3, little change from Saturday, but up 50 basis points in a week. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.